This is Alan Bush with ADMIS. In the stock index futures, we are seeing lower prices in the overnight trade. This basically following through from what we had yesterday, with some pressure developing then after the Institute for Supply Management manufacturing index coming in higher than expected. Normally this would be considered to be bullish for stock index futures, but under current circumstances this is a bearish influence because it could influence the Fed to taper their quantitative easing program earlier rather than later. However, we continue to believe that when the Fed does scale back, that it will be much later than the consensus view. So from here, even though we are lower on the day, I think we can see futures trading higher from current levels. Also, into the balance of this year, I think we can see better prices, and also into next year, with QE continuing to support this market. Over in the currencies, we are seeing the euro currency trading higher, even though we did have Eurozone inflation numbers coming in quite a bit weaker than expected. Of course, this is bearish, the euro currency from an interest rate differential point of view. So the euro holding up well in spite of some bearish news that could be viewed as a sign of strength. Also, we have the pound higher again, closing in on a 2-year high. This after UK construction activity coming in much stronger than expected, and the yen gaining, even though there is more talk about the possibility of the Bank of Japan adding additional stimulus, possibly with a new stimulus program that could be announced in the next several weeks. At least that is the rumor. Longer term, we feel that the yen will continue to work lower, and the British pound will probably be the best performer to the upside. Over in the treasuries, futures trading higher. This due to weaker stock index futures, mostly lower commodity prices, and those rather weak inflation numbers in the Eurozone. We did take out some sell stops yesterday. It appears with a double bottom on the 10-year note being taken out. So with those stops out of the way, I think we can see some recovery gains. And with futures higher today, I think we can see some follow-through strength across the board in treasuries today. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.